All right, short video today. Everything is in an intermediate decline, which means we're going to have some patience for a few weeks. This includes gold and the mining sector. That being said, we're oversold. We're in this daily cycle in gold is really mature, really stretched. So we're due for a bounce. We're due for a bounce in the stock market. I suspect energy will probably bounce as well. Maybe natural gas here. Natural gas may bottom before everything else. But either way, I want to caution people not to expect too much out of the bounce. And by that, let me draw a diagram of what I think is going to happen. All right, so somewhere here soon we're going to get a bounce in gold, and this is going to apply to the stock market as well. But I think you need to be prepared to, if you're going to try and play this bounce, you don't want to hang on very long. Once RSI gets back up and tags overbought, I think you need to sell because we are probably, the odds are high that we're going to have a left translated daily cycle that will then move down and form our final intermediate cycle low. I'm not really in the camp that thinks that the next intermediate cycle low is going to come all the way back down and test this or undercut this November low here. I do think this was the final 8-year cycle low, but there are going to be corrections on the way up, and we're having one right now. So somewhere in here, maybe here's a support zone here at about 1740. That might be a spot for the next intermediate cycle low to bottom. And once this bottom is done, then I think then we've got our chance to break out above 2,000, break out above 2,100. And once we do break out above 2,100, then the bubble phase in gold will be on. But we've got to get through this ICL first. So, like I said, some caution here. When the bounce occurs, you don't expect too much out of it, and you want to sell pretty quickly and get out of the way because we've got another leg down. And let me show you the stock market as well. All right, so the same thing I think is going to apply here in stocks. This was our first daily cycle right here. This is the second daily cycle. It's working down into this daily cycle low. We've got a swing today. I'm not terribly confident that that's the daily cycle bottom. Maybe it is. But again, just like gold, don't expect too much out of this bounce. Don't think it's going to get very far. I'm not even terribly confident that it could rally far enough to make a higher high here. This may left translate and roll over before it can get above this peak. And then, as I've been saying, I think we get a really scary move down into the next intermediate cycle low that in the stock market, I think it could retest these October lows. So the same caution applies here. We're going to get a bounce here in the stock market at some point. Don't expect too much out of that bounce. I don't think it's probably not even going to be worth trying to trade. The bounce could maybe only last 3 to 5 days. So if you don't pick the perfect bottom and the perfect top, you end up losing money. Just get on the sidelines and wait for this. And once this happens, then we can try and pick the bottom of that intermediate cycle low. And that's, I think, where you have a really good opportunity to make some money, and probably easier money than this. This was really choppy in real time. Really hard to hold on to this. Really hard to make any money in this intermediate rally. It didn't actually from bottom to top, it didn't gain all that much, about 9%. And you just had too many moves back below the 10-day moving average, lots of volatility, and really hard to hold on to this. So in hindsight, it looks like, you could have made some money, but in real time it was really difficult. And I've been warning subscribers for months now that stocks were not ready to trend. They weren't ready to give us an easy phase, and probably just not really worth fighting with the stock market. It's going to be a while yet before we work off that huge stretch above that 200-week moving average, and stocks are ready to give us some kind of a trending move. I think probably the Fed has to pause in their rate hiking cycle, and they are heading in that direction. The rate hikes have gone from 75 basis points to 25, so they're heading that way, but they haven't actually paused yet. Once they do pause, then I think it's probably game on, and we'll get a trending move where you can really make some money in stocks. In the meantime, once the ICL forms in the commodity complex and in gold, I think that area is going to be an area where you can make some, where we will get a trending move and you can make some money. All right, that's it for this one.